Now, I don't know about you guys, but as of recently, I have been on a covered call ETF buying spree. And this is because as of right now, at least, I'm trying to do a final push and get my total monthly dividend income up to around $7,700 on average before the end of this year. Now, if I'm going to have any chance whatsoever to get to that goal, I'm going to need to buy some higher than normal yielding covered call style ETFs that are going to pay a substantial amount of income from day one. And in this video, I have a brand new option focused, income focused covered call style ETF that I've never talked about on this channel before. And I'll tell you one thing, this ETF seems very promising, and I'm definitely going to grab a few shares of it very soon here. So if you want to see me dissect this newer income focused covered call style ETF and share with you everything that it has to offer, then make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the ETF that I'm talking about is an ETF that comes from abbvie. abbvie is the provider of ticker symbol DIVO or DIVO, and you guys have probably heard DIVO / probably even hold some shares of it. I own a ton of DIVO across my portfolio. But in this video, we're talking about QDVO. Like I said, this is a relatively new ETF. It's been trading since around August 22nd of this year. Now, a lot of times I don't really like to talk about ultra new ETFs because I like to see how they trade for a while and see how their strategy plays out. But this one has a pretty straightforward strategy, and I think based off of abbvie's track record, this ETF is probably going to do pretty well. Now, like I said, some basic information about this one. The ticker symbol is QDVO. It's the abbvie CWP Growth and Income ETF. The inception date was in August, and as of right now, there's around $10 million in net assets, making this ETF very small, relatively speaking. The expense ratio is the exact same as what you're going to see from DIVO, 0.55%, which isn't all that expensive, especially when you're talking about a fund with active management. But to get into it, it says why invest in QDVO ETF. It says growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. So very similar to, once again, a lot of other covered call style ETFs. You're going to earn some income from the dividends from the underlying stocks within the ETF, but on top of that, option premiums from selling covered calls, which we love. It then says equity exposure with lower volatility. Covered calls and dividends may reduce volatility versus the overall market during times of broad-based market declines. Now, this is one of the main reasons I'm a huge fan of DIVO and a lot of other covered call ETFs, is because they might not necessarily have as much upside as the general market, but that's perfectly fine because during times where the market is red, they also don't seem to sell off as steep. Now, lastly, it says active management allows the portfolio manager CWP to identify opportunities and act on those decisions in real time. And this has been one of the main things that I've been looking for as far as new ETFs to invest into. I used to not really mind if a fund was actively or passively managed, because a lot of times even passively managed ETFs can perform very well. But especially when you're talking about different strategies like this one, it's nice to have active management, knowing that the managers are going to make decisions in real time based upon what's happening in the market, if there's opportunities, etc. Now, it then says objective and strategy for QDVO. It says the abbvie CWP Group and Income ETF. QDVO is the actively managed ETF, seeks to provide capital appreciation and secondary high current income. QDVO consists of primarily large cap dividend growth stocks and is designed to offer high levels of total return on a risk adjusted basis. Now, here's the important part here. It says seeks to provide capital appreciation and secondary, that's key there, secondary high current income. So this is not going to be an ETF like QDTE or like SPYI, one of those ETFs that are trying to get us as much income as fast as possible. Basically, this ETF is trying to gain some capital appreciation, which, especially if you're a younger investor, you're probably going to want. But secondary, it's also going to offer a high income potential, which is also very important to me. Now, I've talked about my unique strategy when it comes to investing as far as a long-term investment objective. My investment objective is simply to buy into different stocks and ETFs that are going to offer capital appreciation, but also offer high amounts of income. And what's kind of cool about that is that these days, it seems like there's so many different ETFs across the market that basically offer exactly what I'm personally looking for in my personal investment objective. But now to get into the meat and potatoes of QDVO, what holdings are actually in this ETF? Because keep in mind, there's only around 60 holdings. So it's not like it's tracking the S&P 500 or referencing a single stock or something. There's sort of a curated group of dividend growth and of course tech names in here, which I kind of like Because once again, I do think that there is some potential upside by choosing certain names and having it actively managed. But we have names like Nvidia, of course, Apple, Microsoft, Amazon, Meta. Then we have some different names like Procter & Gamble. We got some more familiar names like Home Depot, Iron Mountain. There's honestly a good mix of names in here that do offer dividends, dividend growth, and also offer more capital appreciation, which honestly, like I said, for my personal investment objective is honestly spot on. You then see that there is some covered calls. We have some covered calls on Costco, Equinix. We have some Procter & Gamble covered calls. So again, what's cool about this ETF specifically is that they're not selling covered calls on an index. They're not selling covered calls on an ETF. They're selling covered calls on individual names here, which could, of course, in theory, offer a lot more income potential. At least that's what the fund and investors are hoping for. Now, obviously take this with a grain of salt because again, this ETF has literally only been trading for a number of days. Like I said, oftentimes I don't even like making videos about brand new ETFs, but this one, because it's Amplify and because the strategy seems pretty rock solid, I thought it was a good idea to go ahead and do so. The ETF is currently trading at around $25.44 and it's up around 1.28% in the max time frame, so it's mostly traded sideways over the last month or so, with a decent dip back early in September. Now, because this ETF's primary concern is capital appreciation, I'm going to probably guess that this ETF is going to have a lot more upside performance than that of ticker symbol DIVO, which is much more income based. But on top of that, there are tons of names within this ETF that do offer dividends, a high starting yield, and dividend growth. And the most recent dividend payout, which was on September 26, was 15 cents, which is pretty massive considering this ETF. It's around $25 per share. Now, I also think I forgot to mention that this ETF is going to pay a dividend monthly, which is another important aspect, especially if you're buying this ETF, hoping to live off the dividends later on in the future. So all in all, because we don't have all that much data to go off of QDVO yet, there's not really much more to talk about other than the fact that this ETF could be a great ETF to hold on to if, of course, you're seeking capital appreciation and, of course, high dividends. And like I sort of mentioned earlier, if you're a fan of these different ETFs that aren't necessarily buying into an index, but instead are buying an actively managed basket of holdings, like I said, QDVO has 60 different holdings as of right now, selling covered calls on a number of those holdings and basically trading in and out of it over time. From what I've seen so far, I definitely am going to be adding some shares of QDVO to my portfolio, and this is especially if the dividends stay consistent, which we're going to have to see in due time. So now that we talked about QDVO, we talked about this ETF strategy, we even went through the performance so far, as well as all the holdings within it. I lastly want to hear from you guys down below. Is QDVO something that you would have in your long-term portfolio? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.